Hi everyone, this is Paul Lang from Discipline Trading Strategies. You're about to hear an hour-long event that was presented live to the free members of DTS. This one is called 4 Technical Analysis Fallacies, and I'm going to cover some great concepts about charts, some things that experienced and new traders do wrong. You may be surprised by some of these. Naturally, if you want to really learn how to make money in the market, you have to truly learn how to read a chart. I call that the language of charts. You can learn that here at DTS, but in the meantime, whether you're experienced or new, this presents some fantastic points, and there's a couple of focus areas talking about support and resistance fallacies that I think are very key for a lot of traders that they mess up on all the time. If you enjoyed this video, you can check out some other educational videos, articles, and Trade of the Week videos on the DTS Free Stuff page. You can find that from the DTS homepage. So for now, sit back and enjoy this educational event. Good evening, everybody. It's 5 o'clock on the dot on the East Coast market time. You know, one of these times, I think I'm going to do an impromptu next week. I got a whole bunch of topics I want to do, and I think one of these times we're going to do a event for the West Coast. We're going to start at 9 o'clock at night. So us East Coast people are going to have to stay up all the way until 10 o'clock. Next one, I'm going to plan on doing that probably, just for fun, just see who turns out. Let's get going for tonight. 4 technical analysis fallacies, commonly used but not valid concepts. An educational event. Date is correct, Wednesday, April 10th. Let's get to it. Feel free as we go through this. I encourage you, if you have any questions at all, feel free. If you have any challenges, rebuttals, don't agree, don't understand, feel free. I don't think this is the type of presentation that you will not understand. I think you'll understand it. You may not agree with everything, and that's fine. A lot of these presentations I do, I think you all understand. This is not seminar program material, of course, but it's nevertheless, I think, really great material because there is a lot to learn. And sometimes what it comes down to, in my experience in teaching people, is a lot of times people hear me say something and they're kind of, I'm not believing it. I don't really go for that. So one of the things I try and do is convince you, I don't have any motivation here other than to help you in your goal to be successful, whether you stay a free member forever or whether you want to sign up for the room or the letter or you eventually take a seminar program. It's up to you. I don't really care. But I think a lot of people will listen to something and say, I got to go try it myself. But at least you have in the back of your head me yelling at you saying, hey, that's never going to work. Hey, you're an idiot. Stop doing that. And maybe after a week, a month, 2 months, you go, hey, wait a minute. Paul's right. This is stupid. What am I doing? Because some people go on for years. That's not exaggeration at all. I bet you some of you listening to me, if you want to volunteer, maybe tried learning for years and didn't accomplish it because you kept chasing the wrong things. And it's a little bit of what tonight will be about is kind of part of it, why we focus sometimes on technical fallacies. So let's get right to it with that quick little introduction. First slide here is what you get in your email. You've read that or you don't need to read it, who cares? Now this is a little tricky tonight. I put in here 2 freebies. In other words, these are not part of the 4 technical analysis fallacies because I didn't feel they were warranted to be a full fallacy. They're kind of cheap, but they're little pet peeves of mine, so I wanted to put them in here. And then my first 2 were so long and involved, I only put 3. So if anybody argues with me, I'm going to say there's 5 because there's 2 here and 3 coming. But originally these were intended to be freebies, all right? You good with that? So number 1, multiple technical indicators work better when they all agree. And number 2, the answer to trading is to follow your trading plan. Let me take each one of these quickly first here. One of the reasons I focused on this topic today is probably because I am just filled up with frustration, unbelief, disbelief, because what I've been doing lately, I told you some of this, I'm on LinkedIn, which, is a waste of time. It's just, dumb saying hello to each other. But what they did do is because of what I focus on is they have some kind of really good artificial intelligence program that goes around and sends questions to people in their area of expertise. So I get questions in my email about, hey, what do you think about this? And they send it to all kinds of people. So I figured, hey, why not answer these? And I got a hunch nobody reads them. So I answer some of these questions. I've answered probably 20 of them now. And I'm really rude when I answer them. Like you'll know my answer even if you didn't see my name there. I apologize and I say, hey, don't mean to step on any toes, but what people are saying is pure garbage. That's not going to work. It'll never work. I think a lot of the people answering questions are actually people who are more students looking to learn, and they throw their 2 cents in. It's stupid comments. But anyways, my point is I read some of the comments that people are putting out there as helpful educational comments, and they're just so wrong. And I get so frustrated. I'm like, what are you doing? And this is one of them that I see. They're talking, there's a section about how to use technical indicators. In other words, a question, how do you do it? And of course, you know my answer. I don't even need to say it. But somebody said, well, you have to make sure you spend a lot of time adjusting the numbers to make them work. I'll talk about that in a minute. And then another big thing everybody agrees, oh yeah, if you get a whole bunch of them agreeing, then that's really good. If you get technical indicators that all say to buy at the same time, then you got something that really works. These are people that have never used them. These are people that never made a dime in their life. Because like it says here, if you take 4 things that don't work and you put them all together, now you have 4 things that don't work all side by side. I've said this for years. Here's one of my proofs is, prove me wrong. This doesn't work. And I think you know this is what I put down as a cheap one, but don't focus then. And unfortunately, I have to tell you a little story about this because maybe it will help some of you. It's along those lines of, yeah, I listen to Paul, but I don't want to listen to him. And if this person may be here, it's a very recent person I talked to, and if you are, don't volunteer because I have nothing bad to say about you. I just kind of feel bad. But it was somebody who talked to me and was very interested in learning, interested in the seminar program, became a platinum member, I think. And he's in my inbox, and my inbox is probably 50, 100 emails when I clean it out. So I go through and I clean them out from time to time. And I saw a couple weeks ago we talked last, and I go to throw it away. And before I do, I just wrote him, say, hey, what's going on? We talked about doing something. What are you working on? And he said, well, I decided to wait a little bit, and I'm working on putting my strategy together by finding the numbers that work for a couple of different technical indicators. Comments? I need a sip of Coca-Cola. What do you think about that? Yeah, right, Art. I have, as most of you know, for when I trade, I keep a drawer with number 2 pencils in it, and occasionally I sharpen them up really good. And every once in a while I use them to pop one into my cornea when I'm mad about something. That's what I want to do with this. I mean, but sometimes people have to go through this, and you hear me say it, and okay, yeah, all right, I know. But then you go through the process of thinking about, well, what do I do to learn to trade? And boy, it kind of sounds like a long process, 3 whole months or whatever, that's a long time. Isn't there a quick way to do it? And you get sold on these concepts like technical indicators and these type of things because they're fast, they're cheap, they're easy, they're simple. But there's just one problem. They don't work. And the concept of just think about what was said, and this is exactly what he said. I'm trying to find the numbers. In other words, when you use a technical indicator, if you've never used them, you put in different numbers that change the way the technical indicator functions. And he's trying to custom fit the numbers to that chart, which of course will make it work for that chart in case he ever gets a chance to get in his time machine and go backwards a day or two. But it'll never work in the future. And it's just, on my part, I guess sad, that people go through this. And I just want to speed up the process for you if you need to do that. So it doesn't work, period. And I'm going to hit on a similar topic at the end, so I'll save the rest for then. Enough on that one. Most of you know that already, but for the benefit of people, it's funny, newer people may all focus on this for a while, but I brought this up because it's amazing to me how many times somebody who should know better goes back to this, right? Because it's the shortcut. Now this one's going to surprise you. Here's something that's really bugging the heck out of me lately because I see this all over the place. The secret to trading is to follow your trading plan. What a stupid comment is that? Now, don't get me wrong. I'm probably, if you listed 5,000 traders, I'm probably number 1 in talking about a trading plan and the need for it. But it's like saying, like I put here kind of joking, the secret to driving a car is to getting on the driver's side, not the passenger side. The secret to trading is to buy low and sell high. The secret to management is to let your winners run, cut your losers short. The secret to trading is not following your trading plan. Of course you have to follow your trading plan, but what goes, that arrow is going to expose something. What goes here? What are the issues about a trading plan? The 2 issues that matter. Not following it. Of course you got to follow it. I do have a DNA. And the title of that trading plan video, Jay, actually is the answer to my question right here for the most part. Of course you got to follow your plan. That's not the secret to trading. What's the secret to trading if there is one that involves the word trading plan? Yeah, well, number 1 is what the HE double hockey sticks is supposed to be in your trading plan. Isn't that maybe more relevant than following it? No, exactly right. Nobody knows what to say to put in a plan. right? They say, oh, follow your plan. What should be in your trading plan? Oh, you should put the strategies that you've come to know, that by looking at charts and by looking at things. Well, okay, and that is right. It probably take you 5 years to just figure all that out yourself. But your trading plan, what is in it, is what is critical. And number two, if the motto is follow your plan, obviously there's a problem not following people's plans, which is very true. But then the other issue is, how do you go about following a plan that you seem to never be able to follow? Those are the two issues, right? That's what makes you a good trader. What goes in it? And then do you have any process for checking and or following up and or improving on how you follow up in your plan, enforce your plan, do your plan, change your plan, all those good things? Yeah, it's very important, but it's just a dumb comment. It's just like, how do you trade? Buy low, sell high. I'm done. That's it. Next one. Okay, but how do you do it? It's a nice motto to hang on your wall, but it does nothing to explain how to do the process. Right? All right. Let's go on to the top 4 technical concepts that in my mind cost traders more money and are misunderstood than the other. And as I said, I stopped at 3 because we're going to be past 6 o'clock when I get to 3. So you got to pick one of those first 2 and call that the 4th one for me to not be a liar. Everybody good with that? To introduce this first one, I'm covering up the title because the title may help you answer the first question, and I don't want you to cheat. Everybody, I'm drawing a line of resistance on my chart. Should the resistance line be drawn across the topping tails, like you see it here, or, number 2, across the best you can across the approximate actual bodies of the candles? Topping tails, bodies. Where do you draw lines of resistance or support, of course? Either way, where do you draw them? Do you normally cross the tops of the tails or the tops of the bodies? Tails, bodies. T, B. I'm going to wait for 33 answers. The tails, because the market has been there. The body, because, boy, look at this. Right down the middle. Look at this. Body, tails, body, tails, body, tails, body, tails, body, tails, body, tails. Only the tails are the red bars, okay? It's an, it's an area. Well, most of you should know me by now. When I ask a question, oftentimes my answer is going to be, if you answered the question, you're wrong, because the only one that says good answer is J really, it's an area. If you answer the question, either one of those, you're missing the whole point. And the point of this is, as I expose this here, is thinking of technical fallacy is thinking of support or resistance as a strategy or a number. If you think you can be that precise with resistance, it's a moot point. It simply doesn't matter. It's an area. It's a wide area. It's a broad area. As a matter of fact, when I do the daily market letter, for those of you who get it, sometimes I use that red line there exactly. That's the exact line. But sometimes I paint it with a wide pinkish line, meaning, hey, there's this wide area in here. It's always an area, but sometimes we can kind of call it more precise, sometimes a little wider. But it's always an area. It's always an area. This chart is a great chart. It's a rather amazing chart because I'm going to ask several questions about it here. Part of the question comes back to, well, why are you asking the question? Why are you drawing a line of resistance? Well, what could be a couple of reasons that you were even drawing a line of resistance? What could be a couple of reasons? There's 2 I can think of that come to the top of my mind. Why would you be drawing a line of resistance? It could be a target. Yeah, if you went long at the bottom, Frank, boy, you're a bullish person. The first thing you think about is that's your target is long. But yes, that could be your target is long, absolutely. If I went long down here, like Frank said, of course, I hardly need to draw a line to do that, right? I mean, I would just kind of know, hey, I'm in that area, right? Resistance of shorting here, okay. So Barry said one of the obvious answers, I think, is, well, maybe that's going to become, let's cover this back up again so we don't know what's going on there. Whoops, where are we? Where am I? What's going on? Oh, no, that's right. One reason could be is because, hey, if I'm calling this resistance, and again, resistance, not sure what it is, but if I'm calling it resistance, maybe I want to short this, right? So maybe that's a shortable area and I make some money down to here. Maybe there's another reason. Maybe that the bigger picture of things is heading up. We don't see the rest of what's going on. Maybe it becomes a long if I can get above resistance. Remember when I do the Monday night scanning thing, I always say, hey, you can sit here and look at this watch list, but keep in mind there's different purposes, right? Mike A. hit a key word there. Yeah, let's talk some more about this chart here for a second, though. So we pop resistance, resistance, resistance. Would you also think it would be a good idea at this point then to go long if we clearly clear all of this? What do you think? If I get above all of this without any question, you won't argue we'll be above that. Would that make it a good long? Because we got above a very tough resistance area. What do you think, everybody? Yay or nay? On volume? Okay. Well, let me ask you this big question here. When I pop up to here, right, and I quote unquote look to my left, and you guys are saying that's resistance, everybody, what does that mean? What does that mean that there's resistance there? What does that mean? I'm a brand new trader. I'm just coming to the market. I don't even know what the word means, resist. What do you mean there's resistance there? What does that mean? It means if I take my magic marker like this, I can't push it above it. What does that mean, resistance? There's sellers. Okay, all right. So why are there sellers there? There's supply. Supply is sellers. But why are there sellers there? Well, they likely want to sell for some reason. Aren't there people that want to buy for some reason too? People are trapped. Okay. So somebody from here went long, and then they got stuck and they're swearing for 2 weeks, and then they finally got their money back, right? That's a reason. Okay, good. That's a reason. Got caught, exactly, right? And if it happens enough, then we get the dum-dum effect, I like to call it sometimes. It's a legitimate strategy. I use it, but it's the dum-dum effect. It says, hey, every time we come up here, people are selling, I'll sell too. And it's fine. That works until it doesn't work. It's actually called major resistance. It's not the best strategy out there, but it works sometimes. Is that where the resistance is on this chart? Is this the resistance area on this chart? Yes or no? It's right, until the sellers are gone, right, Frank? Prices don't go in one direction forever, right? Prices don't fall forever. They don't rally forever. We run out of sellers. We run out of buyers. Interesting, you didn't say until the buyers are gone. Is this where the resistance? When I'm coming up here right now, here I am. Is this where the resistance is? I want you to keep in mind while you're answering this question. I'm not even teaching. I'm just identifying a couple of mistakes people make on charts. I'm not even really teaching. Everybody, is this where the resistance? If I'm coming up, let me erase all this stuff. Here I come. I'm coming up. See this green bar, green bar. I'm coming up into this area. Is this the resistance? Is that the resistance? The top of this red line, wherever you put the red line, I don't care where you put the red line. Doesn't matter. Is that resistance? Is that the resistance I have to worry about, this red line? What I'm getting at partly here is going to be what I call the language of charts. It means understanding what's going on in a chart and understanding who has to buy, who has to sell, who wants to buy, who wants to sell, and not just looking at this cookie cutter crap and just saying, oh, there's a prior high, therefore people are selling. Well, why? Yeah, it's a zone of previous. So you're saying, Roy, that this is the resistance because it's a zone of previous action. In other words, people keep selling here. So if this is the resistance, it means when I get above this, I should be long, correct? Everybody stop getting so, well, why not? If this is the zone of resistance, where is the resistance on this chart? Frank, I hate to say that, but that is the perfectly wrong answer. Very complex answer, though. Well, it's a very high-level answer, and I'll touch on it briefly. But actually, if you get to 50, you're gone. Where is the resistance in this chart? This is major resistance, it's memory effect, blah, blah, blah. That's not really the resistance. Who is hurting on this chart, everybody? Is the guy who went long here, is he hurting that much? This guy, are they hurting that much here? Nobody's really hurting there. Who's hurting there? It's right in front of you. Yeah, Mike, exactly. These are the people that aren't eating at night. These are the people that are in pain, right? Was there anything wrong being long through here? No, there's nothing wrong. I don't know if I would have been, but there's nothing wrong with that, right? You wake up one morning and you're down 13 times the amount of money you're supposed to be down, right? You're risking $1,000, you're down 10, 12, 20K. Whoops. These are the people that want to sell. Now, what are they thinking? Put yourself in their spot, right? They're, boom, I'm going to hang on because it's coming back. Oh, crap. Now I'm really in trouble. Oh, here it comes back again. We're going to come all the way back. Oh, no, guess what? Didn't happen. Darn it, I missed a chance to kind of get some of my money back. Missed it again. Guess what happens? When you pop above that area where some dum-dums would want to go long, that's where the resistance really is. You see that? This is the resistance area. It's no number, it's no dot, it's no spot, it's no person. It's this whole soft area through here, which is just kind of the midpoint of all this, where people are going to be selling. Because these are the people that are in pain. And when you finally get your money back after a whole month, they're willing to take a little less than all their money back because they've been down all that time. Does everybody see that? So to me, my first two topics are support and resistance because they are, to me, the most misunderstood concepts in the world. Because most traders' view of support and resistance is look to the left, which is not even correct. That's not even kindergarten analysis. Yeah, but Frank, but sometimes, well, as a day trader, you wouldn't be stuck in a gap. But somebody here, you had a swing trade and it turned into potentially a hold forever. So they're whacking in here. It's kind of what I call the whack-a-mole thing. Now for some of you seminar students, I know you're just dying to type it out there, and it's okay. I'll cover it for you right now. But this is actually a strategy that I call a mattress, right? Some of you know this. This is actually a good mattress concept. And what that means is that this is the resistance area. This is a huge resistance area right where we came up into. This is something, but it becomes irrelevant. This is the real resistance area. But what's amazing about this is, while this is a fantastic short in general, I did not take this trade. I'm pulling out charts to show you things. If you get to here, you know what? You're gone. You know why? Because there is no resistance here. Zero. I don't mean close to zero. I mean nothing. Absolutely, positively zero. It's a complicated answer. I don't want to go through it now. Well, I'm not going to go through it now. You can kind of figure it out. Think of the movie 300. Go watch that movie if you don't get it. There's no resistance there. As a matter of fact, it becomes a fantastic long if you find the right entry somewhere in there. Partly because it shouldn't be there. All right? Is that the end of that one? Oh, I didn't advance the slide. Should have been there when we were talking about resistance, right? Any questions on that? So this is my number one thing, is the misunderstanding of support resistance, and actually we're still doing it. Yeah, there's a second example in the same concept here. Another question for you is, by the way, that last chart was Intel. It was Intel. It was exposed on one of those there. Didn't want you cheating and looking at the chart. What? Let's say there was no gap. There was no gap. That waters it down severely. Art, you should know that. That waters it down severely, the whole concept, because the trappage is hugely less. In other words, how you get from here to here makes all the difference in the world. If you gap there, huge resistance. If you have a huge red bar, pretty good resistance. But if you just bleed your way down, no resistance at all, because nobody is trapped. Let's take a look at this one. I'm already out of time. Let's take a look at this one. Support, is that support? I'm talking about right there. I'm talking about this green line I drew from that bottoming tail to this red bar. Is that support? There probably, there's at least two questions that should be asked, or 2 points that should be made. Is that support, yay or nay? There's a variety of good answers to this. One of them is a question. Is that support? That's a daily chart of something. Again, I covered it up just so you won't cheat and look at it. Is that support? Guys, these are questions you deal with every single day. And I know a lot of people answer these questions very wrong. And it's why you end up with bad trades. Not losing trades. Everybody has losing trades. But you shouldn't have a whole lot of bad trades. I occasionally have a bad trade. I had one just in the last 3 days. I looked back and said, you know what, guys, that was a mistake. I goofed. Didn't do that right. Okay, we're in a downtrend, right? In a downtrend. So prior lows in a downtrend are not support, right? Prior lows in downtrend are not support. Is there something you'd want to see though? Well, I'm not sure. Well, yeah. On that chart, I would never short that as a day trade because it wouldn't be set up right likely. Is there something else you want to see though? We're saying that this is not support because we're in a downtrend. No. Oh, by the way, in that prior question too, somebody said volume on here. Volume doesn't matter at all. Volume is irrelevant on this chart. If you break above the top of this, the volume does not matter at all. That's a misconception of volume totally. Matter of fact, look, you did have hugely increased volume. You have to understand what volume does. Volume is not helpful. Just like here, volume wouldn't matter at all, no. Volume. Remember, volume is tricky because you might say, oh, well, there were a ton of buyers, but remember, there's just as many sellers as buyers as any big volume bar, right? Well, one question I would want to know is, what does the weekly chart look like? What if this is a weekly buy setup? From what we can see here, you couldn't tell. What if this is a weekly buy setup? Would not the daily chart be considered to be not in a downtrend if the weekly chart was at its support area? True? So we can't really answer the daily chart without seeing the weekly. So now that we see the weekly, I don't really like it. I don't really like it. Because what if this daily chart with all we see in the daily, that could have been happening, folks, right there. And then I would have loved this. And then I would say, yes, this is not only support, that's where I want to get into my long-term position right there. That's the moment in time. That's the birthplace of a weekly chart move. But looking at this, I don't like the weekly chart. Now, the reason this chart, all these charts are things I've been working with and seeing every day. The reason I pulled this chart out was because when I saw this daily chart, because of this bottoming tail, because of the green bar explosion, because of this retest, I looked at this as being support. When I saw the weekly, I decided I didn't like it enough to do it. But if you did like the weekly, what else do you need to see? Let's say we did like the weekly. I said, you know what? That's not the prior low. That's going to be support. Kind of like it. I think this is a good support area. Let's agree. But if we agree it's a good support area, which I don't really think it is, do we just go long? Do we go long when I hit $54.03? I just go long because that's support? No, we just covered that, right? When do I go long? And I'll tell you the one-word answer to this, but I'm not going to get into it more because, well, it gets into really what amounts in my mind to be hours of understanding. Yeah, well, yeah, a full green bar, sure. Yeah, but I could pull a kid out of first grade and he could tell me that. If I get a green bar that eclipses the red bar, yeah, but who wants to get in then? I don't really want to get in then. Even for a swing trade that's gone, I don't want to get in then. Waiting for a buy setup on a smaller time frame is, sorry, Zach, exactly the wrong answer. Exactly the wrong answer. Uptrend on a lower time frame is also kind of the wrong answer because in any downtrend, on the way back up, you're going to have a buy setup on a smaller time frame. You're going to have an uptrend on a smaller time frame, right? But none of these work, right? This chart is a daily chart. Daily chart. The answer is very simply is that when you see an area like this, support and resistance, you have to think of it like a scientific, like it's a hypothesis, meaning that is an area of focus. That is an area that I now believe could be a turning point. And I need to see some kind of proof now, right? You have an hypothesis and you have to prove that. So I need some kind of proof that we have action. And the best, I'm just going to go this real quickly, the best proof is always failure patterns. So you want proof that the bears have failed to take things lower at that point. How much proof do you need? It varies indirectly with how much you love this pattern. If you think this is the greatest weekly chart, daily chart in the world, I would go on very little proof. Here's the proof that you would have used that day. That's a 5-minute chart. There's the proof. It gapped down. If it gapped down, guess what? No, not be the tail. No, 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 no. I don't think you know what you're saying there, Frank. No, not be the tail. The exact opposite of what you want to do in this case. You never want to be the tail. Here, you want proof of going higher. But see the stock gap down? This is today or yesterday? Today, I guess. It gapped down, right? So it gapped down, and that's the bears saying, all right, let's go, guys. Let's take it lower. And guess what? They didn't. We ran prices up, and then they rolled over. And then to me, if you like this daily chart, you're good to go right there after 10 minutes of trading. That's how you trade professionally. The point of this whole first section was thinking of support or resistance as a number, or thinking of support just as a strategy. Support is not a strategy. It could be part of a strategy, but it's an area to focus on. It's an area then you have to go and then use your technical understanding to find the concept that you want to prove what it is you're trying to do. I can tell by your answers. All right, I'm moving on. Number 2, we're switching now. Number 2. See the little red thing, number 2. Nothing to the left means no resistance, blue skies above. Here is a chart, and I was involved with this trade. I'll explain how much. Boom, boom, boom. Red lines indicating 2 resistance areas. The lower one capturing these 3 pivots. The upper one goes back and captures this. But I don't care what you're using. We broke clearly above everything. Nothing to talk about, right? How would you rate this in terms of being a good trade focused on the question, it's a good trade because we got above resistance? Scale it 1 to 10. 10 means this is great. We broke resistance. 5 means I'm not sure. 0 means I'd short it. Where are you on this one? Should I do the Jeopardy music? Question. Here's a big green bar. There's the prior highs. 10 if you took it. Well, I'm assuming frankly, I mean, you went up right there. You're maybe 10 cents above. I mean, that's not much of a. Certainly, it's not a target. I mean, I guess somebody it could be some kind of target. But I mean, if you're looking at a 15-minute chart, that's no target. That's the initial blast off, and the question is, how well will we follow through based on the quality of that, right? What do you enter off of, Mike? I said I was involved in this trade, Frank. You scalp a tick chart, okay. Well, then that might have worked for you. But even scalping a tick chart, you want the power of the bigger moves as much behind you as possible, right? Right, good, excellent, excellent. I should have known that would have been your answer because you sound like you really know what you're talking about, and I remember you from prior events too. Well, I'm disappointed in all of you because none of you asked the key question. What is the key question you really want to ask to clarify this? There is no strategy exists on one time frame, right? No strategy exists on one time frame. So you'd want to say, Paul, let me see the daily chart, right? Okay, there's the daily. I covered up the current day. So if you're expecting to see a big green bar there, I covered it up so it's not there. The daily chart, I don't see that's a big relevant thing. So here's my answer to this. I tried 3 times to get into this trade and I gave up. But here's the one that's going to be a punch in the gut for you. Room members, just verify. This is just like 3 days ago, right? It was on the 8th. It was Monday. I tried 3 times to get in it, but I gave up. I tried to get in it short. S-H-O-R-T. So you probably thought I was joking when I said 10 is great, 5 is so-so, and 0 you want to short it. I was shorting this. Yes. This setup, I would never take long, ever. In a bazillion, obviously I tried to short it. Never in a bazillion years. This is one of my biggest problems, and it's actually going to be a separate topic at a future event, is the tremendous misunderstanding of break. I think trading breakouts is probably the downfall of more traders than I could even count. There is something called a DTS breakout play that you learn, and it's hard to do. I mean, it's hard for that setup to occur. It doesn't happen a lot. And what most traders call breakouts to me are not breakouts. They're just, you can use the English word for whatever you want. This is not a breakout. It can't exist. You can't have any pattern that wide. And I tell you, this is a little bit, and this is the reason I gave up shorting it, was because of this right here, because of that little consolidation. But you can't run from the depths down here and run all the way to the high and then goof around for a couple of hours and call that a breakout. Where is the selling coming from on this? Oh, here's what happened, by the way. Do you see the topping tail up there? It's hard to see it, but that green bar, the topping tail is on the boundary line, so it's hard to see. But the topping tail is right up there. So that's what happened. This was a great short. It would have made a half a week's profit or more. Why did I give up on it? Well, first of all, let's deal with the question, where is the selling coming from? If you look left, hello, there's nothing here. There's nothing here for 3 months, 4 months. Where is the selling coming from? You have to understand this, you guys. And again, I'm not even teaching. I'm not even teaching. I'm just pointing out things here. What I do when I teach, when I teach, I put a seminar slide in here, but I blanked on it. We have something that we learned called the four events to evaluate to rate criteria, support, and resistance. 4 things you look at that really matter. Not just, oh, look to the left, dum-dum, because that doesn't work. There's no such concept as look to the left. Yeah, you have to look to the left, but the question is, what do you see there? What do you see when you look to the left here? Nothing. Now, Barry, maybe. When I'll give you the 4 criteria, the first one is, what type of resistance is it? Now, that's a whole nutshell in itself, because you have to understand what creates high resistance and what doesn't. This is a high resistance area. But you got to look at a lot of things. This is a long time ago. I don't think the selling is coming from the daily. It might be a little bit, so I'll give you partial credit for that. Where is the selling coming from? Why did this happen? Where is the selling coming from? There's nothing to the left. There's nothing above us. There's blue skies above. Where's the selling coming from? It's coming from here. It's coming from these people. Be one of those people. Be the people, Danny. Be the people. Be the ball, Danny. It's coming from these people, right? People got in from here to here to here. Some people got in here and they ran up and they said, man, that's it. We're looking at everything, that daily chart. We're going higher, higher. And all of a sudden they're on here and like, oh, nuts. I got stuck with this. This guy's underwater. This guy gave back half his profit. This guy's break even, right? And what do you say when that happens? One of the biggest psychological things for people, and actually this is my biggest thing, is that not only you don't want to be in pain, but you want to get out at the high. You want to get out the max profit. Here I had $3,000 profit, and now I'm down to 1,500. Man, that's painful. And guess what happens? I'm back to 3,000. Give me my money. These are all these people selling in here. Now, naturally, on a better chart, you can absorb these sellers and go higher. This is not a better chart. This is all buyers. Now, what would be a better chart? Well, one where this consolidation went sideways for 2 days. And it gave everybody the ability to take their profits. And we see the proof that there's enough buyers to support the people that are selling from here. Does that make sense? There's a song like that, I think. I Can See Dimly Now. I think it's from the 70s or something. The next one. We're going to gap down to here. What do you see clearly now, Jay? Oh, the last chart pattern? Good. I'm glad. I must be a good instructor. Song? What song do you want to sing? You got a song in mind? Let's keep going. I'm messing with you. All right. Gapping down to here. Let's talk about resistance. You may or may not like to trade long, but in terms of resistance, do we have a green light to go long? Because blue sky's above, right? We're going to open right here, and there's no chart pattern to here. Is there resistance there or not? Is there resistance? As we try to move up, is there resistance or not? We've covered all the answers. Is there resistance there or not? I'm so glad I'm doing this because I feel like this is really pounding home some things. I'm going to say it for the 4th time. I'm not even teaching here. I'm not teaching you even right now how to read support and resistance. It's a long, complicated topic. I'm simply identifying some of the key mistakes people make. This is, in terms of resistance, perhaps the highest resistance chart you'll ever see. There's nothing bigger. This is the highest resistance chart you could have probably. Well, the only thing to make it better would be if you erased these bars, if you erased those bars. Yeah, because again, what happened here? Are you an idiot for being long in here somewhere? You see, I always look at the chart, I always say, okay, there's always idiots that are long and short everywhere, and that doesn't necessarily make a great chart pattern. But are there smart traders that are long in here? Mike, I'd be long in here, right? What's wrong with being long? Long, this is a good chart. Look at this, ready for the word? A breakout. And guess what? Everybody who is long is now underwater 20, 30, 40 times the amount of money they wanted to lose. If you're long and you are now underwater, what do you have to do? Well, sometimes you have to sell. When do you sell? Well, most people try to wait. What happens when you're long and you get slaughtered? Well, your first gut reaction is, of course, you don't think logically. You think emotionally. And you start thinking, well, it's going to come back. It's a really big gap. By the way, is a bigger gap down more likely to rally everybody? Absent any other information? Is a bigger gap down more likely to rally? No, not really. Yeah, I mean, there is a slight concept that, I remember, for every penny you drop, get one more bull interested and one more bear less interested. So, I mean, there is that concept, but it's all the chart pattern. In other words, we call a gap down that rallies back, we would call that a novice gap. A novice gap is not created by the size of the gap, it's created by the chart pattern. So you have all these people up here, and what happens is people sit around and they say, okay, well, it's going to come back maybe, right? I just put the top of the bar because to include the whole pattern, it squished the chart too much. So here's the same chart, you ready? But now we're just going to fast forward 5 days. There we go. So there's where we are. And what happens is, when did this topping tail happen, by the way? I don't need to look at the intraday pattern. I could bet you any appendage on my body. When did that topping tail happen? Opening minutes of the day. Who went long? Who went long those opening minutes? Who went long those opening minutes? 2 people. Okay, yeah, well, Frank, you're nice. Okay, idiots went long. True. But there's some smart people that bought it. Some smart people bought it too. Who were the smart people? No. Frank, buying free-falling stocks and calling them long-term is not smart people. That's the bottom of the stupid list. Well, to cut their losses, they'd have to sell. My question was, who bought this stock? Losers getting out or selling. See that topping tail? Somebody bought the stock. Somebody bought all the way down, but who is smart that bought the stock? Short covering. Thank you, Dale. That's why I pointed this red bar. Maybe somebody shorted, right? And if you short and you get that big immediate gap, you typically will cover it. Covering the stock is buying it. It's no different than buying a stock. So this could have been smart people. It could have been idiots. Either way. Yeah, sometimes I'm an idiot. Don't get offended by it. But generally speaking, you just buy a gap down like that, you're an idiot. And then, of course, the pounding comes. And what happens is you get this small snowball effect, right? You're sitting up here, you're down $20,000, right? And, oh, good, I'm only down 19. Here we go. We're starting back in 20, 21, 22. What do? You start selling because you have to, because now you're really in pain, right? And that's what's create that red bar. This is the highest resistance area there is. But yet, you look to the left, and what do you see, Mike? Nothing. Look to the left. No, stupidest comment on planet Earth. You can look to the left and see nothing, and it's the hugest resistance area, hugest you could ever have, like here. And you could look to the left and see a lot of stuff there, and it's really nothing. Want an example? If you got back to here, right, you'd look to the left and say, wow, a lot of resistance, but there's really nothing there. Why is there resistance there? Why? Who's selling there? Who has to sell there? Think about it. Nothing there. Nothing. Even though when you look, it looks like something. Now, keep in mind, there's self-fulfilling prophecy. There's the dum-dums. I'm not saying that you won't have some selling there. I'm not saying I'm not saying you won't put in a topping tail or pull back for 10, 15 minutes, an hour, whatever it is. But you're not going to stop there. You're going to go through. Maybe it's even the next day. But there won't be anything significant there. There's buyers and sellers all over the chart. The question always is, where are the majority? Where's the preponderance? Who's in charge all the time? Where were we? Oh, we're on this chart, and we're done. By the way, I'm not even sure I'm going to answer this question other than give you a quick answer. Because we have one more. Okay, we'll be right on time. If you want to go long at major support, that's what this chart is showing. Don't worry about the word major, but here's the chart. Obviously, you have some strategy to do that. Because again, I'm emphasizing that you don't buy support. That's not a strategy. That's an area that you're looking at to execute a strategy. So if you want to go long here, everything else being equal, would you prefer to stay above support or go beneath support? Everything else being equal. Which gives you the highest security, the highest chance of being right. Now, of course, you have to enter properly. I'm not saying Generally speaking, again, it's a confusing question because I'm assuming that you find the entry you want to find. That's why I emphasize you have a strategy here. You have a strategy that triggers, it works for you, boom, boom, boom. And for some of you that are a little more advanced, let's say you had a little failure here, so you went long on that failure. You had a little failure here, so you went long on the failure. This is always better. Exactly, this is always better. Because when you come to support, there's always this question, right? Are there buyers here? Are the bears going to take control? And what I love about this is, what I hate about this is, you may still come down one more time, and that may stop you out. What I love here is you open the door to the bears, and the expectation is the bears should simply take it lower, right? And if they can't do that, guess what? Now you not only have the longs long, which would include some intelligent longs, some dumb longs, but now you also have short covering from all the idiots that shorted this. So testing an area is always a key thing. And again, I'm going to keep saying this, I'm not even teaching here tonight. I'm just pointing out some things and for the common fallacies. And of course, another way you could look at this, you could add it to the fallacy list and saying, is that a good short? People call that a breakdown. We covered this on the other side. It's the same question, really. I showed you this slide already. That's from the seminar program. And, I can't emphasize enough. It's something I'm really kind of proud of. You see a lot of crap on the internet. I've never seen anybody try to replicate the way I look at support and resistance. I've never seen that anywhere. And to me, support and resistance is perhaps, one of the most common things you need to know in technical analysis. And yet, you talk to the average trader and try and get their concept of what it is, and they really have no clue, other than look left. They really don't. Both have good, but the lower one makes my mouth. Exactly, right. Yeah. As long as it sets up right. I mean, obviously, when something breaks down, that's how it happens. So you have to have a breakdown failure, so to speak. But then that becomes very reliable, and that's what I prefer to see. So here's my last one, and we'll be pretty close actually to a 6 o'clock finish. You can backtest your strategies to find winners. This is a fallacy. And I want to really take a minute and focus on this. And it says here, this may be a dud to close out with because there's no charts. I know, hopefully you enjoyed the last two that we did. A lot of charts, a lot of discussion. Sorry, no charts here. But this talk is about fallacies. And this doesn't involve charts, but it involves fallacies. And I want to go through this because I think, again, this is just a super important topic in the hope of several things. In the hope of, number one, those of you that are here trying to figure this out on your own, that maybe this offers some advanced warning to you, some concepts that you'll understand, absorb, take. For some of you, someday maybe taking a summer program, it's a great way to just keep you engaged and understanding what's going on. These are some really important things. And again, I base this talk on the fact of what I hear from people, what I hear from students, what I hear from people who want to be students, and what they're thinking, what they're doing, what they're looking at. And this one bothers me a lot. Oh, yeah, TAH, you said something I meant to mention earlier. When I kept asking you, I said, is that resistance? Why? There's sellers. Well, why are there sellers? Because it's supply. Why is that supply? Anytime you're listening to somebody who's teaching you anything, ask them those questions. Ask them why. Why? Because so many times, even people that teach this, they don't know. They just, well, because that's a prior high. That's what I mean by the language of charts. I mean understanding what happens at every bend of a chart and know where the odds are and understand who's buying, who's selling, who has to buy, who has to sell, and how that balances out across the four pertinent time frames. That's all there is to trading. I don't want to make this sound complicated. It's not. I know when I give kind of short answers and blah, 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 it sounds like it's, well, that wasn't the answer I expected. But I'm just trying to point out that it's not really common sense to trade. It's kind of counterintuitive. So let's run through this slide and I'll take any questions you want here. I want you to truly understand why I am so against, hang on a minute, back to the previous bottom chart. Sometimes that pattern will go up, then drop one last time. No, true, Mike. It's all about understanding when it has failed to go lower, right? That's the bottom line. And there's different ways it can happen. And you know what else happens sometimes, Mike? You know what else happens to me? Sometimes I'm wrong and I go long something that breaks down and then I'm the idiot. You know, that happens sometimes. But trading's about odds. It's about being right a lot more than you're wrong, and it's about making more money when you're right than when you're wrong. Sometimes you look at something, you get it wrong. Can't help it, you know. So I truly want you to understand why I'm so against technical indicators, back testing, and a half dozen other things I preach about from time to time. There's other things I talk about just as wholeheartedly. First of all, I want you to understand this first one here, right, for those skeptics. I have no ulterior motive. Think about this, right? I can incorporate indicators, back testing, or anything else I want to do into what I teach. It's not like I have to sit here and go, oh, well, this business I have at DTS, if I want people to sign up for something, I better let them know that technical indicators don't work. Well, no, I could just say, hey, if they worked, I could just simply incorporate them in what I do. Couldn't I do that, everybody? Would anybody be offended if I taught class and said, hey, you know what? In addition to everything else, let's look at this CCI because it's a wonderful thing. Couldn't I do that? Yes, everyone agree? I could do that. I don't belong to some secret society that's been banned from the Technical Analysis Club of America, whatever. I could do that. Why don't I do that? Because they just don't work. They don't work. And I want you to just rely on the school of common sense to understand they don't work. And I'm talking, this topic is about back testing, and I kind of flopped over back into technical indicators, but it's the same topic. It's the same thing. It doesn't work. What I want to warn all of you about so much is it's easy to convince you they do work. Why? Because a broken clock is right twice a day, right? You go to buy a clock from somebody, if you show up at their house at 12:20, you'll buy the clock and it's broken, but they'll convince you it works because it's 12:20. Well, the same thing with technical indicators. I could pull out anything and show you 100 charts that work beautifully on this technical indicator because I went and I found 100 charts that worked for that specific technical indicator at that moment, but that doesn't mean it works. Because I could find 10,000 charts where it didn't work for that technical indicator. I think it's an area that, you know, the snake oil is really particularly predominant in terms of software programs. They don't work. They don't work. Thank you, Jag. Thank you. And for some of you, I just encourage you, and like I said when I started this, if you don't want to believe me now, that's fine. You know, go out and try it for yourself. But what I will feel good about is that you have in the back of your mind somebody who's telling you, hey, go try it, But just keep that open mind, keep objective, be smart, and understand when you know this doesn't work, go away from it. But think about common sense, folks. This is the market. This is the stock market, right? This is what hundreds of thousands of millions of people are trying to invest and conquer and understand, right? And do you really think that there's some little indicator that is the magic? Do you think, and because backtesting is the same thing, right? In case you don't understand backtesting, what it is, there's software programs out there that you can plug in your strategy. And it'll go back and test it for the last 10 days, 100 years, whatever you want, and tell you how much money you would have made. It's worthless because you're doing the same thing. You're trying to find the magic formula. And what they all have in common is that any technical indicator, any backtesting thing relies on you being 100% objective. Trading charts are not 100% objective, and they never, ever will be. They never will be. That's a fact of life. If you think about it, if you understand math and probabilities, it's scientifically guaranteed. You can't have a system that works all the time because there has to be losers. And whenever there have to be losers is going to imply subjectivity because things are changing all the time. And that is what I teach, is how to be as objective as you can, but yet how to understand that little bit of art that goes into trading. Human beings are flawed. We all are. We all have a tremendous perception bias. I think you all know what that means. But for trading and in terms of backtesting and technical indicators, what it means is you want this to work, right? You want it to work. When you backtest your strategy, when you plug into some technical indicator, yeah, confirmation bias. I'm sorry, Frank. Confirmation bias. Actually, I think that's interpreted the same way, but confirmation bias says you want it to work, right, Frank? You go try some indicator, you want it to work. So you see it work on 5 or 6 charts, you go, wow, this is great. And then when it doesn't work on a few, you go, oh, well, that's okay, I don't care. But you don't really do the objective analysis and say, okay, let's take the next 100 trades and see what happens. Oh, this thing lost me money. Of course it did, because nothing like that will make you money. It can't. So yeah, there are backtesting things you can use, but if you want to backtest an objective strategy, you can't, because you will never plug in the right numbers because you don't have an objective thing that's totally objective. And if you do, it'll never work. What would be an objective strategy, in other words, for those of you confused? A purely objective strategy would be this. I'm going to take a 5-minute chart, and anytime prices stay above the 200 period moving average, and they then trade above the high of the last 18 5-minute bars, I'm going to go long with my stop under the low of the last 7 bars and go for an all-out target that's 1.5 times my stop. That's an objective strategy, right? And it'll never work. You can go backtest all you want, and you can find something that'll work for some trades you selected, but it's never going to work. Again, in the effort to not have you waste your time, and what really bothers me is, everybody, I've said this before, it's not that you're wasting your time so much. It is, but it's that you then lose your faith in technical analysis. That's what bothers me, is that people who do this. I sent an email out a few days ago about a guy that said, that, oh, day trading is a scam. Okay, right, it's a scam, buddy. Do you think you had some hard knocks in the past day trading? Obviously you did, right? Because if you can't do it, nobody can do it. It's a scam. I just want you to keep it all in mind. There's more simple test, confirmation bias. You want the quick fix, and so many people go through this. They go through, all right, I'll try and train myself. Okay, let me look at some kind of seminar program. Oh my gosh, that's expensive and it's going to take a long time. No, I don't have that much time. So let me go back to, oh, here's a software program. Here's this, here's that. It's the quick fix. And what's the thing we all always say? Oh, you know what? It only costs a few $100. It's only going to take me a few weeks. It's worth my time to try this, to give it a try. Okay, there's 0 chance it works. What do you think your odds are now of giving it a try? So anyways, once you introduce a modicum of the needed art, you cannot backtest. It's impossible. You'll be testing something that you will never do, and your test will not react to changes like you can or should. Part of your trading is to react to what's going on. However, I'm going to close on a very positive note, then I'll read your comments here and let you go or answer questions. There is a type of backtesting that does work. There is a type of, I think I'm going to like what you typed there, Mike. I barely read it, but because I think it's going to be what I'm about to say. There is a type of backtesting that does work. You know what that backtesting is? It is the most valuable thing that you can ever do. And that's backtesting what you actually did. And maybe backtesting is not the right word for it, but it is. It's what I call a what-if analysis. And most of you may not even know what that is, but it's looking at what you actually did and going back. Because here, guess what? That is it's beyond trade review though, Frank. Trade review is fine. You're basically trying to see if you did what you're supposed to do, right? I'm taking it another level beyond that, Frank. It's called a what-if analysis. And it's going back and in a sense backtesting what you did, because here's the key, folks. Here's the gold that's out there, is that those are the trades you actually did. In other words, you went through your process. These are your real strategies. Why? Not because you wrote on some piece of paper over the last 6 bars, but because you took these trades. So now the question is, I took these trades. Number one, did I do what I was supposed to do? Okay, I did. Number two, how can I turn these break-even trades into winning trades? What has to happen? Did the trades make money if I managed them differently? Did the trades make money if I held them to the end of the day, if I held them longer? Is it management? Is it the entry? What if I use a totally different entry process? What if I use a totally different target taking process? These are all the what if questions you have to answer. This is where the gold is, and this is how you become successful. However, most people will not do this. Why? I'm going to sum it up with one word, and you're not going to like the word. Yeah, thank you, Frank. I'm glad you said it, and I didn't have to say it. Most people won't. It is the single most valuable thing that you could ever do, and most people won't. You know what part of the reason is? I've seen all the time from traders, right? If you do some recording of things and you do go through the process, you typically will be anxious to record on a winning day. And what do you do on a losing day? You kind of fall behind, forget about it, just jot the numbers down and walk away. The losing days are the ones you need to focus on. And nobody wants to do this. Psychologically, it's hard to do. And nobody really wants to focus on this. And it is the key to really trading. Let me add one more thing, because this brings up, and again, if this person is here, don't volunteer yourself unless you want to. But I'm about to work with a seminar student who emailed me, and basically he was doing well, moved up the risk, and now he's starting to lose. He wants me to help him out. Okay, that's what I do. Seminar student, I'm all over it. Send me this, send me that, send me this. He sent me his stuff, and you know what? He tracks what he does. He has an advanced tracking sheet. He has a real handle on exactly what he's doing. His risk management was perfectly used and progressed higher. He has everything. And you know what? He's going to be a piece of cake to fix. I'll guarantee you he's going to be fine. If you're here listening, you're going to be fine. You know why? Because you are on top of it. You ran into a bump, and that's what I'm here for, to help you get past the bump. But so many people will never be in that position. You can't fix something that's broken when you what? Fill in the blank. Because it's the problem with most traders. You can't fix something that's broken if you don't know what's broken. It's stupidly simple, but every trader I talk to, most of the traders I talk to, they don't have a clue what they're doing. They don't know what they're doing right. They don't know what they're doing wrong. They're just taking trades. They're not making money. Help me. Hard to help them. This guy, piece of cake. I can't guarantee anybody's going to be good. Like I always say, I won't guarantee anybody can walk and chew gum at the same time. But the type of person that goes through the finesse that he has, and you know what else? He recognized he had a problem, right? He didn't just bury it or get mad. He said, boy, okay, I'm a little lost now. Something went wrong. Let me get a hold of Paul. So it's a perfect scenario. All right, I'm going to go back here. I'm officially done. That's the last slide, I think, right? Let me go back and read some of your comments that I didn't read. And then feel free, if you have any questions, I'll hang around as long as you want to answer any questions. Well, Mike, the problem is with those cheap indicators, you got to buy the expensive ones. So you can't buy the cheap ones. You get your money's worth. You got to buy the really expensive ones, and they'll work better. Well, Jay, number one, I haven't met with him yet. He sent me stuff. I didn't even fully look at it yet. We're getting together over the next few days. But the process will be simple. It's so simple it's hard to believe, because a lot of times you get blinded by yourself. I mean, you can't see what you're doing wrong. What's my example? Me proofreading. If I proofread somebody else's paper, I am the best proofreader in the United States. I will catch every spelling, grammatical error, and every nuance that can be made better. Me proofreading myself, I don't catch it. Why? because I don't see my mistakes. I have a one-track mind, and it's like if I wrote it wrong, I will read it as if it was written correctly. You know what I mean? And that's what traders have. It's a great analogy. That's what traders have. They look at a trade that's done terribly wrong, but they don't see it. So sometimes you need somebody else to step in and say, hey, you know what? Guess what? You moved your risk up on this day. Your trading went into a slump. And look at your trades. Your trades were just as good as any other day, but you changed how you manage them. Look at that. Because you're afraid. You're risking too much money. It's easy to fix, Jay, if you have the stuff in front of you. I can even usually fix somebody if I've been training them, if they've been in the seminar program, and they send me a bunch of their trades. Well, then it becomes rather easy to fix them because they're speaking the same language. I have a little problem when somebody sends me trades and I've not taught them, because now we're speaking different languages. Now I have to get into this thing where, okay, yeah, I see what you're doing, and yeah, that can sometimes work, but I would never do that. And then it becomes a little fuzzier. When they take seminar program from me, it's kind of more black and white. It's like, hey, all right, this trade you did properly, it just didn't work. Don't worry about it. This trade here, look, you're not doing it right. Look at page 132. Look what we talked about. Look what we discussed before. And the person goes, oh, yeah, God, what an idiot. Why am I doing that? So it becomes pretty easy to fix somebody that, number one, cares about what they're doing, and number two, has been trained to some degree. I'm down to the bottom. Do we have any questions? Have any comments? Me personally, I don't know, sitting here, I may feel different than you guys do listening. I felt it was great. I mean, I don't say that on everyone, but I felt it was great. Thanks, Frank. Coming from a guy I called wrong at least twice today. Sorry about that. Looks like we're done. If you're in the room, we'll see you tomorrow morning. If not, probably be getting together for what I call now an impromptu event, because I don't know, my mind's been going crazy lately, even though I've taught so much. I've 120 of these events I've done, and I have a list now of like 12 things I want to teach to you guys, to the free members. So you're probably getting a couple more emails, and I'm probably going to call an impromptu event sometime next week as well too. Like one of those 2-day notice things when I feel like talking. So, all right, guys, have a great evening.